Hello everyone and welcome to my morning report analysis videos with me, Richard Perry, market analyst at Hantec Markets on Tuesday 12th of June. We've got this massive news overnight that Donald Trump has met with Kim Jong-un of North Korea. This is an historic moment, and markets have taken it fairly positively because the meeting has gone fairly positively, it would appear. They've signed an accord, and basically it just means that they've come to an agreement to sort of move towards denuclearization, if I can say that word, and that is a positive. But again, what actually is denuclearization? Is it a binding situation that the North Koreans are actually going to say that they will do? Is it a permanent situation? I mean, all these sort of aspects of this agreement are still yet to be sort of unpicked, really. But I think generally speaking, it's just gives the sort of sense that they are willing to start to sort of de-escalate the tensions between US and North Korea, which is the main thing really, and why markets generally speaking have been relatively positive on the back of it. What we have got is let me just show you the general markets, which is basically risk positive really. We've got gold lower, we've got the yen weaker, we've got equity markets certainly in Asia they were positive overnight, but just slightly fading the rally that we had in Europe earlier on today. And it'd be interesting to see once again if the market starts to sort of rein back really on the positivity of this deal, considering, I mean, it's fairly much probably the bare minimum of what we had been expecting really from this meeting between Kim and Donald Trump. Because basically Trump would want to be seen to be the big man, the big guy that brings North Korea back into the international fold really. And he would be desperate to get that accolade of being able to do that. But anyway, what we have seen also is global yields higher. We've seen US yields ticking higher, although not as much as German yields, UK yields, and for that matter, actually Japanese yields. But still, the markets are taking it fairly risk positively, and the dollar had been positive earlier on, and maybe the fact that the treasury yields are not ticking higher as much as other major yields is hitting the dollar in latterly. But certainly we've seen a positive reaction nonetheless. Just depends on whether this will continue. Now this sort of marks the beginning of a huge run of massive data releases and central bank meetings that we've got throughout this week. Really massive week of data and potential volatility. So it seems as though the markets are fairly positive going into all this. We're starting today with a whole clutch of data really. Let me show you the board here, where we've got UK unemployment and average weekly earnings. Basically expected to stay as they were, 2.9% on average weekly earnings, which is the key factor there. German ZEW at -14. That'd be third consecutive month of negativity there on the ZEW, and also the lowest since 2012. Not great. And then you're into the US inflation data. Let me show you first of all the UK inflation charts. CPI inflation data is tomorrow for the UK, and average weekly earnings is expected to remain at 2.9%. So continuing the run of real earnings growth, which is positive. For the US, we're expected to see CPI on a headline basis ticking higher to 2.7%, that's the purple line, and then on the core CPI, which is the blue line, actually ticking higher to 2.2%. So continued improvement in US inflation, which is what the Fed's looking for. Fed meeting begins today. So yeah, lots to go on today. That takes me to my chart today, which is the dollar Canadian, that's not dollar Canadian. Sorry, which has been trending higher in the last, well, since the dollar rally really kicked off in mid-April. The dollar Canadian has been trending higher, and you've got these sort of news out from the G7 and NAFTA, which has not necessarily been positive for the Canadian loonie, certainly. And what we have got is this pivot around 129. If I zoom out, you can see 129 has been a historic key level of resistance, and then sort of has come back in and acted. It started to become a bit of a pivot again. So 129, any dip towards that, I think, is a buy opportunity. You've got 128, sort of 85 as your basis of the uptrend today, but anything around 129 I think is a buying opportunity. That seems to have acted as the basis of support in the last sort of week, and pushing towards 130. It hasn't really managed to sort of drive a close above 130 in any decisive way, but if it does start to close above 130, you can sort of tend to open 131.25 again, and the market certainly looks to be sort of gaining momentum once again. You've got the positive configuration on the RSI, MACD lines and stochastics, generally speaking, tend to sort of reflect that weakness is going to be bought into in this chart, and there is a bull bias, although admittedly the buying pressure isn't especially strong, but still there is a positive bias nonetheless. So it certainly looks as though that the market is sort of building further upside and looking at probably a test of that March high in due course. You can see here on the hourly chart where you've got this run of sort of high lows above the moving averages, momentum indicators, relatively sort of rangy really, but you'd still suggest that on the daily chart buying into weakness remains the way to play this chart. So with that in mind, I wish you good luck in your trading, and I will speak to you later.